First up, the Coronavirus Job Retention Scheme. Under the scheme, all UK employers will be able to access support to continue paying part of their employee's salary for those employees that would otherwise have been laid off during the crisis. The scheme, open to any employer in the country, will cover the cost of wages backdated to the 1st of March 2020 and will be open before the end of April. It will continue for at least 3 months and can include workers who are in employment on the 28th of February. So, how do we access the scheme? What do we need to do? First thing to do is designate affected employees as furloughed workers and notify them of this change. For those that have never heard of furloughed, it basically means a period of time that a worker is allowed to be absent temporarily from work. Changing the status of employees remains subject to existing employment law and, depending on the employment contract, may be subject to negotiation. The second stage will be to submit information to HMRC about the employees that have been furloughed and their earnings through a new online portal. HMRC will set out further details on the information required in due course. The key thing is that HMRC will reimburse 80% of furloughed workers' wage costs up to a cap of £2,500 per month. For employees to qualify for this scheme, they should not undertake work for you while they are furloughed. This might be revised in due course. Whilst HMRC is working urgently to set up a system for reimbursement, we understand existing systems are not there to facilitate payments to employers, so more of this to come. So what needs done now? Review your staff resourcing in light of the support offered. Has anyone been made redundant that could now be furloughed? Who of your existing workforce should you look to furlough? I know many businesses that were looking at redundancy options or reduced working hours that now need to reassess given this support. Prepare ahead of the mechanism being introduced for receiving the cash. The second measure, VAT payments. The next quarter of VAT payments will be deferred. The deferral will apply from the 20th of March until the 30th of June 2020. Meaning businesses will not need to make VAT payments until the end of June 2020. Businesses will then have until the end of the 2021 tax year to settle any liabilities that have accumulated during the deferral period. This is big stuff. The deferral applies automatically, very important, and businesses do not need to apply for it. VAT refunds and reclaims will be paid by the government as normal. So, action required. Do not pay your next VAT payment. Next up, income tax payments. Income tax payments due in July 2020 under the self-assessment system will be deferred to January 2021. This is an automatic offer, no applications required. No penalties or interest for late payment will be charged in the deferral period. So, action, similar to the VAT, don't pay your self-assessment due on the 31st of July 2020. Could the funds be put to good use for 6 months? But remember, you'll need to pay it by the 31st of January 2021. Announced earlier in the week, but worth a reminder, is HMRC Time to Pay arrangements. HMRC's Time to Pay scheme can enable businesses and individuals that are in temporary financial distress as a result of COVID-19 to delay payment of outstanding tax liabilities. HMRC's dedicated helpline will provide help and advice and are the ones to contact: 0800 0159 559. Action required? Well, no actions required for your next VAT payment, as we mentioned earlier. Call HMRC now to agree time to pay for the latest PAYE and national insurance due for February 2020, if not paid already. For those with a company financial year end of 30th of June, corporation tax payments will be due on the 1st of April. Do you need to arrange a time to pay? If so, do it now. Finally, the Coronavirus Business Interruption Loan Scheme. These should be available from Monday the 23rd of March and are delivered by lenders that partner with the British Business Bank, including all the major banks. Essentially, the lender receives a guarantee of 80% of the loan amount from the government, and they're available for UK businesses with a turnover of no more than £45 million and can provide for a facility up to £5 million. The borrower remains liable for 100% of the debt, but no interest will be charged for the first 12 months. So, The action to take now is to get your financials up to date and get your forecast prepared, ready for the mechanism for making applications to go live early next week. I hope this helps you to understand what needs done now. Take action, use the experience and knowledge of your advisors. More importantly, take care.